Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on SPWR. We love when a company is holding shipments and are putting a brake on their operational business.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to the Laughing Stock. Johnny, how are you today?
Yeah, good. As you can see, I'm on a virtual holiday today.
Oh, it's beautiful there.
And I see you have gotten your tan on a little bit.
Yeah. I was cooking in the sun most of this week. It was nice. It was nice to finally be on a break for a little bit.
Yeah, good to hear. What do you think about SPWR then?
I mean, can you get any more bullish right here? You know, you get this.
You love when they.
It's not often you get handed this nice pullback.
Yeah. Remember, I think we talked about them in a stream, and they are in my tracker sheet. But I went through my notes, and it was pretty much because of the high short interest they had. They had like a 80% short interest or something like that, and it seems like they are getting it right this time.
Yeah. I think the time's starting to run out on it. You know, on some of these plays, and even though I'm in big right now, it's kind of for the same reason. There's a bit of a pop, which is the reason I got interested in big. And you know, some of these companies, it's definitely playing with fire. So it's a risky position, I'll say that for sure. But yeah, some of these ones, it's just, you know, you get news like that, like, you know, Big's closing stores, SPWR's halting operations, like. It's tough to stay bullish in those, and even though it's probably going to get oversold and it's going to bounce back, it's tough to catch that. I mean, that you are playing with the falling knife there, so it's I'm not saying it can't be lucrative to take positions on some of those things, but to try and catch it and actually time these things is very tough, and you can get huge losses in like a day. So I don't know, it's risky business.
I think this has fallen quite heavily two days in a row now. It was a little bit back up now, I saw, but and like you said, they can of course get a bounce, but I'm not updated on the short interest here, and I saw that like a broker, like some analytical people have downgraded them and think they will go bankrupt, and that's also influenced the big move down or on Friday. So and if you go on Seeking Alpha, I can see all this news that they are actually like we said in the video, they are halting their operations and putting on the brakes, and it just doesn't look very good for them. So I'm keeping them in the tracker, but that doesn't mean I'm interested at this point.
Yeah, I mean, this is where it starts to push it for me. You know, even though I am swing trading a lot of these stocks, like hey, sorry, my dog's in here. Like, I'm not trying to take on where like something can go down 55% in a day. It's just too risky.
Yeah.
You know, because like the problem is you could have a good week and you could make like, I don't know, 10 good calls, and even on those 10 calls that probably equals about 55% if you're turning over most of your portfolio. And then you have one bad stock like this go down 55%, and it eliminates that entire week of work. So you know, I mean, you're gonna have stuff that you just miss. You're gonna have stuff that you get lucky on. I got lucky on CHUY that we had talked about this week. I just happened to buy right before it had the 47% jump. So I mean, give or take, it's gonna happen. You know, and it's not to say that we obviously don't look at risky companies. I mean, we do, and who knows? I mean, this is up. You know, someone bought this at 67 cents and they're up 1.58%. So,
yeah.
You know, there's it all depends how you play it. And but I mean, this is something now, like you see this, I don't know. I don't think you can touch it right now.
No, it's hard for me. And also in general, I've been a bit like careful with the solar industry. I'm watching it, but I just feel like they struggle. A lot of these green companies struggle to be profitable, but that doesn't mean that you can't get a gain there, you know. But a lot of them, when I look at the fundamentals, I'm a bit careful with them.
Yeah, and I mean, I have a position in Maxion, which NASCAR and I were talking about the one night, which got me interested just because the short interest is so high. And I think last time I checked, I mean, it's like really high now, which
yeah,
you know, I'm not saying it's like a fantastic yeah, we're at 76% right now of float.
Yeah, that's
like
a lot.
I'm definitely more interested in the short thesis on this one. And I mean, if you look at the numbers and stuff, it's not like it's going bankrupt tomorrow. So that's part of the reason I'm in that one. And if I go, hang on a second, just we'll go to the portfolio real quick. But Maxion, it's a 4% position, which you know, it was down another 10% too, so it's not like it's even worked out yet. But it moves around a lot. I think my cost basis is at like 23 cents right now, so I'm not down all that much. But you know, it moves down 1 penny. That is a lot in terms of the stock. And I get it. That one's a super risky position. I took on a lot of risk this week because being on vacation, I was able to sit there and really kind of like play around with things. I had more time to kind of watch stuff. So this last week I got a little nutty with a bunch of my stocks that I'm in. So, you know, this is definitely not investing advice. Do not buy these companies for any reason that you see in my portfolio, because some of these are going to go up and down like crazy.
Yeah.
You know, and some of these I'm just looking to get in and out of, and some of these I probably am going to have to sell for a bit of a loss. So just take that for what it is. But before the stream, Johnny and I were talking a little bit, and the thing is, with some of these risky companies, you know, this was a crazy week in the markets, I find. You know, the CPI data from, you know, came out, and small cap really rallied. The Russell 2000 had such like a bullish trend for the first time in who knows how long. And you know, the tech industry pulled back, which the rest of the markets were pretty red from actually. But then at the end of the week, the Russell sold kind of right back off, like it had that pop and lost. So that's why I was saying, you know, as swinging some of these positions, I really have to watch what I'm doing and making sure that I'm taking some of the gains off the table. Even if I don't sell completely out of the position, I should at least be putting sells in at different parts to make sure that I'm still collecting profit and getting my cash back. Because now what I've found is I'm stuck in a few of these, They'll probably have to be a little bit long-term holds, and I'm probably going to end up selling it like a slight loss, which, whatever, not the end of the world, but like, you could see this week, I had about just under shy of a 1% gain, so I should be happy. I was just telling him, whatever, it's a 1% gain in a week. It's not a loss, so I guess I should be happy for that. But on Tuesday or Wednesday or whatever day that rally was, I was up 11% for the week. And that's a day I should have, when it was so bullish, I should have really been trimming that day. And instead, ended up making some mistakes. Now, like I said, CHUY's, or how I don't even know what, I haven't ever been to that restaurant, CHUY. It's like CHUY's, or I don't know how you say it, CHUY's. It's like a Mexican restaurant. But
don't ask me.
Yeah, but either way, Darden Restaurants or whatever the company's name is, they own like Olive Garden and stuff like that, which it's chain restaurants in the United States, to be honest. The food's not all that great, but either way, just happened to time that one and get lucky, and that's why I said sometimes the charts are bullish. What if I pull up the chart here? What I was looking at is I got in on, I believe, the 15th. I started to see this one turn around here, and I got interested, and then I woke up this morning pleasantly surprised. So just like you can have some of these big drops, you can have something turned around too, but it's it's not like I did anything special. I wasn't, but that's why I feel like I'm averaging how many companies I'm holding. I found that this is around 20 right now, which I kind of like, and I'm still experimenting with some things. I bought some Chinese companies for the first time in probably years, because I feel like that market's tough. And I still have quite a few biotechs in here, which is more just me playing around with the charts and seeing if you can take advantage of those. Those are other ones too that they were up, and I should have trimmed those positions and didn't. So like I said, I'm fortunate to be up 1% this week. It's a shame, because at one point I was having a great week, because when you're up 11% 1 week, you feel unstoppable, and then the next day the market punches you again.
Yeah.
So whatever, lessons learned. Like I said, I'll continue to work on the overall strategy and the ability to make sure I'm capitalizing on those gains. But the whole portfolio's up right now. Should be I should be happy for everything after all considered.
Yeah, and remember, like, this is a little bit new for us, this new path of adding some more technical indicators and stuff like that. So we are both testing out a few things. We are talking a lot about what we look for and stuff like that when we are not on the stream. So we're going to make mistakes, like maybe you did a little bit now with not taking the gains, and then it fell again. But that's all part of trying to fine-tune this to work for us consistently. And I think the great point here is, like, the markets in general are down and you're still up here, so it does still work in that way,
Yeah, it works. And like I said, I made a bunch of mistakes. Like here's a perfect example. So VTNR, I bought in, I believe, somewhere in here. It might even have been after this huge bullish rally here. And then it had the little pullback, and then it was up. And I remember seeing it somewhere in here. And for some reason, I don't know where I set my sell. How did this look on a weekly chart? I think because the weekly here looked strong, I was trying to set it somewhere up here, because I had seen that it had bounced up higher quite a few times, and it looks like it's kind of turning around on the weekly. And I'm holding these positions because I still think these will work out. It's not like all these I think are going to be losses. I'm hoping I'm still correct in the long term. But my point being is, if I'm swing trading these things, I should have been able to sell here, buy again, and then do it again. That's the whole idea of some of these positions being a little bit faster, is that in an uptrend that you can buy and sell that a few times and actually, capitalize on the fact that it's the same company that I've actually played, 3 or 4 times in one uptrend and managed to make a better amount by doing that. But either way, so, I saw it on this chart and I'm pretty sure I was setting my sell somewhere in here, I assume this is going to pull back here on this. These are Bollinger Bands on here. It didn't work out, which is whatever. But either way, I probably should have been more focused in here and just seeing that this support level here or resistance level here kept getting touched, and it's failing to break through. That should have been more of a signal to me that, hey, this rally's probably struggling here. You should probably take some gains off the table, because at that point it was like a 20% gain, and here I am thinking like, I can get another 30-40% here. Why sell here? But and now in hindsight, it pulled right back to where I got in, and I'm up like nothing.
Yeah.
So just little things like that led it's tough. And
it's not...
RSI didn't touch here, but it has gone oversold a few times. So that's another thing too. I'm checking RSI and I'm like, it didn't quite oversell here. Just keep holding. And I think, like I said, going forward, to me now, on days like this, when I'm checking at the end of the day to see how the positions have done, those are things that should have signaled, hey, just take some of this off the table, even if you don't eliminate the entire position. At the very least, just trim on those. Just take your gains, be happy with them. And then hopefully, at the end of the week, I'll end up with it. Maybe I won't capture that 11% I had the one day, but maybe I get 6%, 7% as opposed to 1, which in hindsight makes you kind of just hate yourself, but it's whatever.
But it's a bit tricky to reach these decisions when you are in the middle of it happening, and maybe you have to burn yourself a few times before you end up in the same situation again and are capable of making a better decision. And then I guarantee you that one time you will sell and it keeps going up like you were exactly like you were thinking here, that's
right.
Also going to happen.
And don't get me wrong, I mean,
like,
what's the aim? With the portfolio.
The aim is...
Sorry.
Yeah, sorry. Okay. No, the aim, what's the aim here? And we have talked about this before, the aim is like 5%. And if you then have 6%, like you just said, that's you are beating it.
Right. And we're talking in a week, I mean, the S&P historically is around 10%, and with adjusted for inflation and stuff like that, it's probably actually right at 10% or lower actually. So, if you're shooting for 5% a week or even close to that, you're crushing it. You're absolutely crushing it. So it doesn't even matter. I should be pumped that I got 1% because we, initially in the stream we were talking about, we're looking for 50% gains. If I get 1% a week, that's 50% in the year. And it's stuff that I'm turning over. And I know taxes are an issue, but it is what it is. I mean, you have to pay taxes. So I like hate that argument that like, oh, well, if you don't hold for a year, you have to pay taxes more. Whatever. I really don't care. At this rate of turnover, the taxes mean nothing to me. So it's part of what it is. I'm not holding. It's very rare that I hold something for over a year anyways. The stuff that I'm holding for over a year is not in this portfolio. I have another portfolio, and that stuff is long-term holds. Some of that stuff I'm literally following Warren Buffett's approach, where I don't even look at it. I bought it, I like the company, and unless I see something drastically change, I'm not selling those. So the whole point of this is to keep building up, and then hopefully as these portfolios do really well, I can start transferring funds from these into those other portfolios that are the long-term holds, and that are a little bit safer, slower. They're slower returns, but I can do this because I'm nimble and small in these portfolios. You know what I mean? Yeah.
That's the general plan, I think, and we are in the race tracks with this portfolio. This is the quick speed one.
Correct. So which that's why we've talked about it. Like on here, I'm not showing you guys my slow portfolios. Like no one wants to watch that. it would be really boring. I would pull it up and be like, yep, it moved around every day. That's all I would say, because it's, you know, when you're looking out to hold something for 5 or 10 years or longer, no, like nothing matters. Everything is just noise. Where in here, you know, day to day matters. Hour to hour can sort of matter. I'm not, like I said, it's very rare I get in and out of positions in a day. It does happen now sometimes just because of where I set sells, but that's not what I'm aiming for. I usually assume it's going to take a few days for something to play out.
Yeah.
But the other thing too is that you guys don't see is because and you know, sorry I didn't get to stream on Tuesday, but even though there's 20 companies here, I'd say I probably sold 10 companies this week for a profit, which is why even though some of these or most of these were down by the end of the week, I'm still up because, and you guys don't get to see it because you didn't see the portfolio, but you know, I'm in and out of other ones that have worked out. So the one thing that I've been working on this week that I think's super important is the lists that I'm using to screen by. And Johnny and I had talked about this. You know, each week I have my daily movers, I have insiders, the weekly movers. I have a few things that I've pulled from Seeking Alpha in terms of the way they list stocks. Just different screening methods essentially. And the whole goal is I'm watching those at different times and seeing how they're performing. And I'm looking for ones that consistently give returns. So, hopefully the goal is, because there's only so much you can look at, that I'll find that 2 or 3 screening methods seem to work best, and that those lead me to good stocks that have more immediate upside. You know, the 52-week lows, my watch list, those kind of things, companies that I know well and have been in a downtrend for a while usually, and, you know, I'm waiting for that turnaround. I'm waiting for some kind of news or something. Those are usually the ones that hit well. Insiders actually hit surprisingly well. If you follow the insider list and you're watching the technicals on those, I mean, I'll tell you right now, those are almost the hit rate on those is actually pretty insane. They consistently give good returns. So hopefully going forward, I'll keep hitting those. And I've noticed actually in terms of insider buys, if you want to ever buy biotech, the insider buys are usually good. If you're going to play around with biotech, that's one of the only things I really think actually is pretty bullish for a stock, is that the insiders are piling onto something. They might just be raising funds too, so it's not guaranteed. But I have noticed that those ones, at least in the short term, tend to do pretty well.
Yeah. And I think moving forward also, like, new ways to screen on, and I told you this before we went on today, I'm also like... I managed this week to build out some sheets that give me the tickers with the last week of insider buys, and then I just transfer them into my TradingView account and I go through the charts, which is very efficient, I think. And I'm going to start screening in that way a little bit more, maybe also on the streams, you know. But I'm not sure, like, if if people watching are interested to see, you know, going through 20 charts. So I might narrow it down a bit for the stream. But I think it's a great way to quickly figure out if something is interesting or not. And I'm actually, like, it gives me a bit of confidence. If you look at the last few streams, the tickers we have gone through has performed, like, had some days with a good bounce, actually, like 12%, you know, 20% and more in some of them. And as always, nothing here is investment advice, but if someone watches and do their own due diligence on these companies and decide to buy and they are made a gain, it's pretty, you know, that's one of the aims for the stream, isn't it, Dayne?
Yeah, and not only that, you know, depending on your time frame, you can be doing things probably better than we are at times, because, to be honest, there's times I've sold something and it continues to rally for 2 or 3 days afterwards, which is why I'm saying to focus on sometimes just taking the gains off the table, or at least part of it, because you can sell out too fast, you can buy in too quick. but if as long as you're trenching in and out of these things, you can do pretty well. And I'm not saying that I'm not going to take like 15 days to sell out of something. Like, you know, it'll probably be 2 or 3 tranches. But either way, there's quite a few names that you and I have gone through now that if you had taken a buy there, you'd be up substantially. And once again, this is not financial advice. I do not recommend you buy any stock that we talk about. Please do your own due diligence. But I do think that this screening method that we're using, and then going into the fundamentals on some of these, it just kind of gives you an idea of really where that company's at in the moment. And then it's the chart that's letting you know that things are like the rest of the market is starting to agree with us, regardless of what we think.
And it maybe sounds stupid, but I also didn't buy anything of these tickers, but I tried to explain that on Thursday. I got my cash on a day late, you know. I have the cash position now, finally have some room to play with, but I would have, for example, bought ICD if I could, with the cash position I have now, but then the next day went up, I don't remember what it was, 17% or whatever. And then I'm just like, I feel like I'm too late, you know. So I didn't take a position either, but ICD has performed great this week.
Yeah, and we
ICD
here.
We looked at it a week ago.
Yeah, no, I'm just saying ICD here, like on the chart. I mean, you can see this return coming back up. I mean, this was where the bullish signals start, and then it follows up. And granted, it's already pulling back, and like I said, this whole thing's still in a downtrend. So, and like I said, I don't know. I guess everyone does their technical analysis differently, but I'm not here like drawing shit on here. Like I know some people are like, oh, look at that, like boom, we broke through, great. I don't really care about the lines. They mean very little to me. I'm definitely more of. I would argue that I use statistics and things like that in terms of where I'm finding my buys and sells. You know, I the one thing I would say I use more is probably support and resistance. These diagonal lines, I know people love to do these things, and like to me, I feel like I'm doing this and like it means nothing after a while. So I'm not using them like that per se, but I do think you start to see this even on this bullish rally day. I mean, look how high it got in one day.
Yeah.
And you know, if you're talking about it here, it's a solid return in one day. I'll say that.
And also just to like, I think ICD has room to run way higher than this even, but I consider it right now that I missed my chance at it at the lows that I'm very like, this is deep value, right? Even if we do some swing trades and stuff like that, it's still fundamental based in deep value. So I think ICD has room to go even higher, but I'm not in it, and I don't unless it pulls back again. I think I will stay out of it.
Yeah, and
Which sucks, but I mean, the value of the stream hopefully is that some people noticed it and maybe got a gain on it, you know. Yeah, but still, not an investment advice.
Yeah,
it's a bit tricky.
I think the point is you know, if you're trying to speedily get in these kind of things and you're really trying to catch some of the bottoms on some of these things, which is really what our goal is at this point, which I mean should be everyone's goal: buy low, sell high. You know, there's times where charts move sideways for a long time, and sometimes it doesn't end up bouncing back bullishly. And if you hold something through a whole sideways trend and then at the end it still breaks down on you, it's just tough. It's long, it's frustrating, and the goal is really to avoid those. I mean, ICD, even on fundamentals, to me, earnings are rough, but are actually up or better than they have been. So, but margins are improving. I mean, there is things even fundamentally here that look decent. It's a super small company, so I know most people aren't looking at this kind of thing, but it's one of those things that, that's where you gotta have to dig around, and sometimes that's the thing is like, yeah, these things are in rougher positions, which is why they're so cheap, which kind of helps with the margin of safety. And then the other thing too is my margin of safety now has also evolved to where it's not just like when I look at this chart, for instance, I see how oversold it is on some of these drops, and even if you're this is like such a basic amount of technical analysis. If you were just watching RSI, when RSI starts to turn here, you can see how well it does. RSI starts to turn and it does well. RSI starts to turn, it does well. RSI starts to turn, it does well. And I'm not saying these are massive gains, but in the style that you and I are talking about, where it's a little bit quicker holds, or even if you're just looking for a position to enter on, or maybe like, let's say you wanted this to be a long-term hold, and every time you add to your position, it's always on one of these. It's only going to take, some good news or something to turn around, where if this goes back up to $3 and even if you had started here, let's say you started at this 224 and you had been averaging down on each one of these RSIs, you could get your cost basis down to just below like $1. And if it ends up jumping back up here to like $3 or $2, I'm saying, that's still like a 30% gain. And this is in the course of, I don't know, not even half a year, about a half a year.
Yeah.
So
still a short time period.
Yeah, it's a short time period to end up in a company that most people don't want to touch, and you're still getting a 30-some% return.
Yeah.
So
Starbucks is in this.
Yeah, it's a different way of thinking of margin of safety in my mind, but and I know value investors will probably laugh me off the the face of the earth here, telling me that I'm using a chart for a margin of safety, but whatever, it's worked so far, and I can see it consistently working. So and it's helped me, and like I said, I've backtracked it with so many of the stocks that you and I had looked at before we had started really taking the technicals into consideration. And the charts just point out like a lot of good like times to get in and out. And if you're using that on top of understanding the narrative of the business, I really think you have a huge advantage. I think that the technical guys who don't ever look at the fundamentals, I think they're at a disadvantage. And I think the fundamental guys who don't look at the technicals are at a disadvantage. I don't know why.
Yeah.
And RK said this, in the initial streams. It's funny that people don't use both.
Even still on the last stream, we're checking the chart.
Yeah.
But Dayne, if they laugh at us, we are the laughing stock, so it's okay.
Yeah, and whatever. It's been 1 month. I'm up 7.6% this month. I'll consider, and this is a trailing month. It's not like I'm talking July specifically. But either way, I'll take it. I'll take it as a win so far. So
yeah.
And who knows? There's probably gonna be time periods where I'm up and down, and it just is what it is. And obviously I'm not hitting my 5% a week goal yet. But it's improving each week, getting a little bit better, getting a little closer.
Yeah.
And like I said, really, I need to shoot for what, 1%? That'll make me hit my 50% a year, which was the initial goal, anyways, for the stream. So
yeah,
I'm hoping we can crush that, but we'll see. We'll see as the weeks go on here.
Yeah. And it may take time, but we are trying at least to. And it's not like you see us on the stream. Like I think we are. The streams usually last for around 2 hours, and it's, in my opinion, at least, we are not sitting here talking bullshit. So we are also off the stream doing a lot of work. So it's not like we just figure out things and test it, But it's a lot of work behind. So. I think we will end up finding a way where we can get these returns that we are talking about. And for some people, it sounds crazy, and maybe it is. But yeah. I think to have a high aim is just good, to have something to reach for. And then if you only end up with 20 or 30, it's still amazing, right?
Yeah, and that's just basic risk. You have to put substantial risk in order to get rewarded for these. And the idea is that to the average person watching from the outside, it probably looks crazy risky. But at the same time, too, it's something that you practice. And as you get better at it, you know, it's going to get to the point where it'll pay off. And like you said, we're aiming for stupidly high numbers because if we don't hit them, who cares? Like, we're still killing it, you know?
Yeah.
Really, you should be happy if you're over the 10% mark. Like I said, I mean, if the average S&P is around 10%, look at hedge funds, mutual funds. They're all shooting to beat 10% essentially, maybe 12% if you want to argue on the high side, or whatever the S&P's been doing essentially. So if you're beating that number, then I mean, great. You're beating even some of the well-educated. And even them, I mean, what is it? It's a 90% failure for managed money. So 9 out of 10 people fail at this. So whatever. And like I said, I mean, this is from when I started marking it, so it's not fair to say that I'm up this year by 6%. I am not. Not in this portfolio.
Yeah. No.
Which, well, I'd have to actually go back and look where I was at the start of the year. I'm definitely still down from BNED, but at the same time, too, my gains from some of the stocks before that, and from last year, I was way up. So, it is what it is.
Yeah. And we are fully aware, and we talk about this also regularly, that we for the stream to have any credibility, we need to deliver results for ourselves, and we need a little bit time to show that. And if you go back and watch the episodes this year, obviously a big mistake has been BNED for us. Which has kind of messed up the year a bit, but we're trying. Hopefully, we can get it back at the end of the year. But let's see how it goes. And by the way, Dayne, ALTO this week was 0% move. You know, the earnings we are getting a bit closer now.
Yeah. So the other thing too. First off, BNED did work out. We were right on BNED. BNED's up to like $10 now. So. Yeah. Even though I oversized that position and got screwed with the warrants, which in hindsight I should have just held the position and transferred money from another account into this. I didn't want to do that because it was a mistake I made, and I've learned from it now to keep my position sizes at least somewhat smaller. But BNED would have worked out. I don't know. I think since it failed for us like 10 times now. So I've made money on BNED. I've caught some of these moves here. I got like 10% one time, and I think like 5% another time. So I'm slowly gonna make all my money back from BNED. BNED, I'm still gonna get my bookstore. All right, I'm still gonna get my bookstore back. So don't worry about that. But with ALTO, for instance, this is another example of what I was talking about. So I got in on ALTO like we had talked about, like $1.33. And I sold it, most of that position somewhere in here at this $1.60 mark. And then, me just talking how I'm not drawing lines, basically looking at this uptrend here, I retook my position now at $1.59 because I think this is going to continue to trend up. So, I'm back in ALTO. I mean, it's not huge right now. It's, 3.5%. But that position, my actual cost basis for that was like $1.59, so I'm up a whole penny. So rock on. But I think but this is what I'm talking about. I think this is one of those things that like if I can keep capturing on the way up for ALTO, I like ALTO's story. So this is the thing is, even though I'm buying and selling on this one, when you like ALTO's story, it's easy to kind of get in and out of it because, to be honest, if I sell after huge gains, I'm not scared to go back in on days that it has the pullbacks because I just believe in the story.
Yeah. And if you go to Seeking Alpha for ALTO, Dayne, there's a new comment that I think it's it builds up on the promising environment I think we are in right now. If you check the latest article and the first comment that comes up there from Bert, it's a bit long, but he's talking about how how the look of the crops are right now in the Midwest.
Yeah, and this is one thing that I've been listening to a lot of podcasts, and typically most of the podcasts I was listening to were more talking about fundamental investing and more the style of it, and I understand or at least I feel comfortable with it now. So like I don't need to listen to a lot of that. So what I've been listening to is a lot of people just talking about markets. Just random talk about anything. I'm pulling in anything I can think of. Like, I find that like the more knowledge I have about any subject, the better it is for investing. Like, if you're just focused on like one thing in investing, like you're missing out. Like, you should really just be trying to learn as much as you can about any subject, really, because it will help you in investing. That's one of my favorite things about investing. And one thing I've noticed is in terms of the commodity market. The most important thing is to understand that commodities are very complex. There's a lot of things that matter with commodities on a macro level, with individual businesses. And when you're looking at something like ALTO, for instance, Bert's comment here, it shows you that he is someone who really understands that point. Because what he's talking about is there's a lot that's going to go into crush margins in the U.S., and in order to understand what affects those prices, you have to look at every aspect of ethanol, essentially, or corn, and how that plays out in the grand scheme of things. You know, he's looking at the fact that sugarcane is failing in Brazil, which is what they make their ethanol out of, that now they're going to have to import, which is going to increase the cost and the price of it for the United States, because now we're going to be exporting it on a higher demand level. I mean, you know, there's a lot going in here.
Yeah,
I would say
and
the
look
only
at the last
bearish
sentence.
thing. Sorry.
Look at the last sentence there. If you look at ALTO for a little bit of a longer term, you know, we are talking about this SAF, this sustainable aviation fuel,
Yeah.
and the possibilities in that market. Look, he's saying 2024 has seen a 14 times increase in SAF production in the US.
Yeah, and
But
SAF
still a small market.
SAF is a huge deal. You know,
Yeah.
if you look at, if you are actually worried about climate change, the amount of pollution or CO2 essentially generated from airplanes is massive. It's a massive amount of the actual increase in CO2 around the world. So if airplanes are able to switch to SAF fuels that essentially burn net negative carbon or zero carbon, that's a huge deal. And I know this market's going to continue to increase, and the government's pushing for it. There's a lot of incentive now, especially here in the States. I don't know worldwide exactly how much push there is, but there is a lot of push for it. And you look at the amount of production that ALTO is able to do for their different plants and whatnot. I just think that this market is at the beginning of an explosion, really, which his comment is saying. I mean, a 14 times increase. That's a big increase.
Yeah, and of course you're going to get a little bit of a higher number when it's a smaller market, but still, this is coming. And he's saying like airlines are pushing hard for more stuff. They have to, right? Because they are, like you just said, they are on the how do you say it? Like, they are under the spotlight because of the green footprint, like they are leaving in a bad way. So they have to come up with looking at all alternatives to improve their own situation, or else they're going to feel more pressure for it, you know? So this is just like for the longer term play in ALTO, and I think I'm a bit disappointed. I think that's the only thing with the last reports, that they didn't talk more about this in ALTO. So let's see if they talk about it now in August.
Yeah, I'm you know,
They
one of
have
the things that
spoken
you and
about
I
it
had
in
talked
past.
about in terms of being tough to hold through is, you know, holding through an earnings report. You know, I know most technical analysts will tell you to, you know, if you're not sure, don't hold through an earnings report. And at this point, I'm curious. I know historically the earnings reports have been bad, where we've had like 5 in a row that have been either bad and or just not good enough, essentially.
Yeah.
And I think this is the first time we're headed into one that's going to be bullish, and I really think you're going to see the stock appreciate here. So we don't have that much longer.
If one of the things we are talking about is bullish on that report, I don't understand how this can still be on the 2.
No, this will go above 2 if this earnings report does any. Even if they're if they improve guidance at all, we're in for a good rally here.
Yeah, and let's say they also talk like in a more clear and heavy language that okay, we are actually looking to sell the assets in the West. That also could increase the share price.
Yeah, no, I agree.
So okay, it was a boring week if you owned Alto with a 0% move, but before that it was up a lot. So I'm not sure, unless there's some major disappointments again, that you're gonna see, 130, 126 again. But I didn't think we would see it again even after last time, so I was wrong about that. But for me, that was just the opportunity that I think I was lucky to take advantage of.
Yeah, no. Sorry, I'm also just reading through Justin and analyze this his responses to here. But
yeah, he's pointing out some things that he thinks the author has done wrong in his article. And I must say, it must be a bit heavy to be a author for Alto now when you have a guy like Justin there who clearly understand the business and has followed them for such a long time. I don't think you can write much that Justin doesn't know about in Alto right now. So if you are missing something, he's gonna let you know.
Yeah, and to be honest, I feel like this is such a poor hindsight look at the company itself.
Yeah. He's pretty much discounting all the triggers they potentially have for the future.
And this isn't how it works. You can't just say that because the price is appreciated that now the revenue has to be 10% higher for the 2023 revenue. That's not how it works. It works on what's going to happen, and it swings higher and lower than it always should. So he's saying that we've appreciated now 10% back, and because of that 10% appreciation from price from the bottom, that we need to go up higher. That's not how it works at all. If things starting to look good and there's a longer projection, if you think that things are going to increase over the next 10 years, like let's say that's your outlook. If you think over 10 years this is going to continue to improve, then that price should automatically get priced in now. When you do a discounted cash flow analysis of something, it's the all future cash flow. So he's acting like, all of a sudden right now in this next earnings report, they have to say 10% is going to be there, or it's never there. That doesn't make any sense. That's not how it works. So he's really failing, in my opinion, to just understand one basic part of finance. I don't know who this guy is, but I just think this is a poor way of understanding it. Don't get me wrong. I'm not saying he's wrong on the idea that maybe it doesn't work out. But I'm saying to look at this and say that it has to be up 10% on revenues right now based on 2023, that doesn't make any sense. That's not how it works.
Yeah, I think analyze this. The comment above courage and convictions comment summarize the issue very well here. I went through it on Thursday, so we don't need to go through it again. But he's pretty much saying what you said now, that this is a too simple take on it.
Well, and analyze this is kind of saying what I'm saying, but towards the opposite. He's like, the stock's under $2, and you compare this to companies whose stocks are trading at, 5, 10, 20, 25 times the price of ALTO. He's saying that the market has already priced in all the risks of the company, which is why the stock price is already so far down in the first place. So it works in both directions. If the future outlook of a company over the next 10 years is great, the stock starts to appreciate to those prices because people are anticipating the rest of the market is going to want to pay up to those prices because that's what it's worth in the long run. Same thing is if there's a lot of risk to the company, people tend to discount it because they don't want to put a substantial amount into these things. They don't want to take that risk on. So they have to take smaller positions and they have to assume that the things, that it's going to be priced lower. So we are already priced in 4 worst case scenarios besides bankruptcy, which is the only, it starts getting cheaper than, like I said, $1.30. You're pricing it for bankruptcy, which makes no sense. It's not going bankrupt.
It's not going bankrupt, and it's not a stock with a high short interest right now, but that's also a bit interesting, I think. Not a big deal, but when I first jumped in on ALTO, the short interest was about 13%. It was way higher than it is now, and then that disappeared. So people have shorted this in the past, but you don't see anything about like a big short interest now, which is kind of like what you just said. It's not going bankrupt, right?
Well, at this point, the only time anybody, in my opinion, if you're shorting ALTO here, if earnings comes out, let's say earnings come out and it's just horrible and the company just completely misses and makes up a bunch of excuses one more time, you're going to see short interest increase and the price further go down because management's really failing to prove anything.
Yeah.
I would find that super difficult to believe going forward. I just don't think there's anything that they could do. The worst I see this earnings report coming out is that it's kind of the same thing where it's just not much has changed. And maybe you'll see the price go down to that $1.30 low or whatever.
Yeah.
Or maybe even break that a little bit, but I still don't think it would get killed. It's still not going for bankruptcy here.
No. And I'm not discounting that. This can be another boring quarterly report, but then you need to look for what are they saying about the Western asset sale and carbon sequestration program. And I don't think they will, drop the ball on all 3 of those.
Right. So
that's what I think. But I've said this for a long time now. If they fail miserably on this earnings report, I'm gonna rethink about what I think about ALTO.
Yeah, and I think that's. What else can you do? I mean, that is what it is. That's what you have to do.
Yeah.
And I've been fortunate that my timing on ALTO has worked out very well, so that's kind of allowed me to play this a little bit differently than you have. But but at the same time too, I don't know. Even if we're looking at earnings per share here, they're still generating cash flow, and that's actually been kind of bouncing back up from the previous year. And earnings were down, but they're still close. They're still generating EBITDA, which I know it's just EBITDA, but it's something. And it's just going to show that I think they're slowly moving in the right direction here. And this is what I'm saying is, and I think this is to analyze at this point, that we're already kind of at like worst case scenario here besides like the whole thing falls apart. That's the only other like real negative step from here. And sure, the stock price could bounce around and go up and down from here. But you can see it. I think the market here is starting to look at ALTO and say there's really not much downside here. It's worth kind of starting to take positions here because the downside is limited. Everything's priced in. At this point, any news, anything good will cause this to appreciate.
I actually saw another on stock tweets. Dayne, I'm just gonna pull it up here and read because you know more about that stuff than I do. and I don't know, I didn't confirm this, but there was a guy on StockTwit saying that there was big volume in the October and January 2024 calls. Today's strike of $1.50.
Yeah, so he's just talking. I mean, he's just saying that everyone's when you see that it's basically people covering. They're probably using a covered strategy. So what that's saying is basically that people think even if there's a downside, that it probably would go down to $1.50 ish, but it's going to hold there. So what it does basically is when you see options come in and they're setting a floor there, what you're probably going to see how that plays out on the chart is that around $1.50 here, you're going to start to see that this is where it's going to bounce it off of, maybe somewhere in here. It's a bullish sign, you know.
Yeah.
You know, for instance, if people were putting their calls at $1, then you realize that, okay, people are pricing in, or because this is all in the future. This is all, you know, them expecting that, hey, I'm taking a position today. I think it's going to get up to $2, but just in case it goes down, I'll set mine at like $1.50 to make sure that I limit my downside. It limits upside, but it allows you to play it safer. Which actually my next big thing I want to start delving into is option strategies. So I put a few books on my my list that I'm going to go through for options. Which I don't know how crazy I'm going to get with any kind of options, but I would like to start just delving more into it. You know, historically I've only really played leaps, which is really for long term and stuff that's just cheap on Greeks and everything like that. Which, don't get me wrong, I feel like I have like a decent understanding of options, but I would really like to delve in. So I got a few books on my list that will be my next buy. I didn't know if I wanted to pull the trigger because they're not cheap. The books are pretty expensive.
Okay.
Which, whatever, it's less I care about the cost of them and more that I just have the time to sit there and read them and actually process the information.
Yeah.
So, because, you know, sometimes you just get busy. So is life.
Yeah. We're doing a lot of things.
Feels like it never ends.
Yeah.
Do you want to start going through some of these, or I don't know how much time you got?
No, I have roughly half an hour before I have to go. It's a little bit of a shorter stream today, but we can go through a couple of the tickers, I think.
Yeah, some of this list Johnny gave me, I threw a few on here just that I want to check out at some point myself. But is there one that you know that you wanted to look at first?
Maybe PBF, because I think PBF starts to become a little bit interesting where it is right now, and that's a company that I think it's pretty solid.
PBF's a great company. I have that on my great company list.
Yeah.
I think every you know, when I look at PBF, everything looks great. Everything's been good. One thing I will say is it is in energy, so obviously these things can be part of the cyclical market, but just really, it's been really well ran, and I mean, just look at this chart here. This is what I'm talking about when it's, you know, cyclical market here, but we're right back down to lows. You know, this was up to $60. So
yeah,
the opportunity for this to come back here is there. It did break the support there. I want to look at a longer chart actually. Let's do a 5-year. This is the thing. You zoom out and it looks like a huge change, and it's really not that crazy.
Yeah, I think it's not how do you say it? It's not there yet, right? But it's getting close. I think this is worth paying attention to, this development.
Yeah, I mean, and this is what I'm talking about. I mean, we're definitely in such a big downtrend with it that obviously, you know, people are expecting everything to slow down, and like I said, I mean, these numbers are kind of unsustainable. This is amazing the past 2 years for the company. So
yeah,
it's not very often, you know, you go from $18 to $55 in book value, but
yeah,
but either way, I mean, look at this cash flow. $29.
Yeah, they have. Yeah, and they have cash also.
So you know, revenues are gonna pull back here, but this is the thing too, is like I like to look at all this stuff more on averages. And when you look at the average revenue, I mean, we're still in this huge uptrend right now. So obviously the market's pricing in it coming back down to earth here, but a lot of cash, relatively low debt, 2 billion, you know, and they're paying it way down. I mean, that's way down now. They bought shares back. I love this company. And same thing. This is one that I'm going to be watching for this, to finally turn around here. What's everyone saying about this? Is there any news on?
I haven't read the news, but I'm checking the insiders, and there's a lot of buys around 44 to 46, which is way higher than we are now, right?
So there's a change in administration. And once again, this is the dangerous thing about these companies, is you have to look at things when and typically for commodities, you actually want to look at it when book value is actually back down, because book value goes really high in these cyclical periods. It looks great, but it's actually like the worst time to buy. So the market's already priced that in quick though. You know, it's dropped back down here. So this is one that you really got to follow the story a little bit more. So I'll have to read in. I just like PBF. It just historically they capitalize on when commodities are doing well. But we'll see. I think it's going to matter in the States here, especially who our next president is.
Yeah.
At this point, I have no idea what's going to happen, and I don't want this to get political. You know, I'm not saying I'm going one way or the other. I don't really care. But I would just say if Trump gets in, I would think that's bullish for energy. He seems to be someone who really will push for oil and all those kind of things. And you know, where if I don't know if it's going to be Biden or someone else is going to step in place for him. But if the Democrats are in, they're obviously more in terms of, you know, green energy and less bullish on oil at the time. So we'll just see what it has to do. And there's so many things that go into the energy market that even that's just one part of it.
Yeah. 11% short interest.
Yeah, well, you know, the shorts probably realized too that it can't run as high as it was. Yeah, this guy, Bulldog, he's saying that he thinks there's limited growth in PVF, and he thinks someone should trade it. So here we go.
Yeah.
And this is part of I think, you know, kind of what Johnny and I have been talking about is historically, when you're looking at this from a fundamental perspective, these ones can be tough because you're trying to time the bottom of a cyclical move, and then you end up holding it, and sometimes you have to hold it through a big chunk of the down period before you raise it back up. Where if you had just followed the chart on this, I mean, you can see every time these start to turn around, the kind of gains. And I mean, we're talking in a few days going from, you know, $40 here to 46. And even if you don't capture this whole move, it doesn't really matter. Like, let's say this is the first time you got bullish on it. Still from, you know, in a 3-day period here, it's $4 on 40. So it's like a 10% gain, which I'm not saying is the biggest thing in the world, but you're talking 10% in 3 days.
I'll take that.
And you know, once again, and that's I'm looking at kind of one of the smaller examples of this turning around. I mean, this is another example here where it's not huge gains, but if you're trading this on these bullish signals each time, you know, this one, let's say you captured this one, let's say you got in here as this starts to break out, you know, you get the 3 days here, Then you get this spinning top here, which I've been reading a lot of technical analysis, so I'm starting to notice things like spinning tops and all these dumb names, dojis. It's so stupid, but they it's so dumb, but they do matter to some people, and I don't know if that's why it pops and they actually work out because people just believe in them. But you get dragonflies and all this nonsense that people are talking about on the candlesticks. And, you know, you see it and look at, you know, let's say you had bought on this spinning top here. And, you know, you could have rode this up to, let's even say 50. I mean, that's a huge gain in only a few days. And once again, pull back, and, you know, you start to see it turn around here. And you could capture this move here. So if you had traded this successfully, yeah, you don't get it in the one swing where you hold all the way through these, but you could get, let's say you got 5, 10, you could have got 15 there, maybe another 10 here. I mean, you're talking 50 some percent, and we're talking in the course of a few days of holding periods throughout this period here. And that's from November to, let's say, April or March. So in a 6-month period, you had held the stock at different points for a few days and made 50% returns overall in half a year on it.
Yeah.
I'm not saying it's easy to do that, but I'm just saying that in some of these bullish uptrends, especially after these huge pullbacks, and I'm not one to short, but if you look at it from the exact opposite perspective, if you're a trader who shorts these things, you know, on these big downtrend days, it works out.
Yeah. And I'm looking at the daily now, and you can see the RSI turning a little bit. It's you know, oversold there, and it's turning a little bit around. So I think maybe if it falls a bit more or goes a bit more sideways, I will be interested to see and wait for the indicators what they do. And you know, Dayne, maybe there will be a development in you know. That you can see a orange elephant development in the chart here.
Yeah.
Have you heard about that term?
I have not.
No, it's the Redneck Johnny technical analysis term. This one.
I like it.
Waiting for the orange elephant.
See, I think the most important way to view it is it's the slide. So we're looking at the water slide, and it's doing this, and then this, and then this, and then this, and now we're in that big slide. Eventually, what goes down must come back up. I mean, that's just basic physics right there, reversed.
Yeah.
So we're looking for the next big slide upwards now. So. And you're not going to get this in a lot of other places, okay? People aren't going to provide you with this kind of analysis. So
this is exactly why I want Kathy Wood on the channel.
Yeah, and Kathy Wood is probably fantastic with crayons. So I really think she could probably provide some valuable insights on this.
Yeah.
You know, I should probably be changing my lines. I should probably have green slides upwards.
Yeah. You have the wrong color, obviously.
We could do blue slides for the sideways ones.
And this is what I'm talking about. You can see now that the orange elephant is starting to develop.
And orange comes from, what is it? Is it red and green? Different reds and greens?
Obviously, yeah.
So, you know, if you're drawing the reds and greens here and you're going over each other with them, it starts to look orange. So the elephant starts to appear.
This is how it is.
And you know, we'll draw some lines down here too, because it's really important that you have lines on your RSI chart too. Don't forget the lines on the RSI chart.
But all the viewers can just relax, because we're gonna drop a link to the technical analysis course that the Laughing Stock is providing in the description.
Yeah. So I mean, you can see based on some of these lines, you know, the real trend starting to develop. But more in all seriousness, if I can get this stupid thing out of here. No, but like, you know, just to Johnny's point, like, if you're following this on a RSI and stuff like that, I mean, you can see on MACD here, it starts to turn around as RSI starts to turn around. And when you get some bullish signals all together, it doesn't matter. I don't care what technicals people use. And like I said, I'm less about the lines. You know, the lines to me don't mean so much. I'd rather see when it's oversold, you know, and when the sentiment's starting to change. You know, that's why I like to use RSI and moving averages. And, you know, I don't have any moving averages up here, but I have a lot of different ways I look at things.
And I think in a company like this, like PBF, where there is a fundamental case in the bottom here, and we know the company well, and we have a good view of the company, you know, it gives me a bit more strength and belief that this will eventually turn around. So this is more to help us time like close to a bottom. So that's what we're trying to do, right?
Yeah. And like I said, if we zoom out, let's do even 2 years.
Yeah.
And I do actually have some moving averages on this one. And not that the moving average to me means all that much, but I mean, you can see when it does break through or break down, you can start to see the trends turn around. So the problem with some of these moving averages, though, is it's behind. Like this is you'd probably want a faster one on here because, you know, by the time this moving average actually crosses below here, the stock is actually starting to appreciate back. So I think I put these at 50 and 200, which is what most people use, which it doesn't matter, to be honest. But I would probably do them a little tighter if you're going to try and actually trade this. But even if you're more of a longer term investor, I mean, if you waited till this signal here, and then you waited for it to start to turn, I mean, maybe you could at least capture most of this move here, which isn't that long of a time. It's about a month, and it's still. It's like a 15% gain in a month, you know. I mean, it's a little less or a little slower than I would like it to be. So that's why I'm not doing it this way. But I can see if you have a little bit longer term horizon as a trader, or if you want to call that an investment. I think it's a little short time period to be calling it an investment. But you know, to each their own. And you know, this is buying it at a peak here, and I mean, you have to ride it through. So you're going to take this gut punch there.
Yeah.
But it is what it is.
But Dayne, did you check the insiders? Because there's a lot of notes. I've never seen these notes before. Do you know? Have you seen them? Because it's heavy buying.
I think it's just saying that they're a 10%er, so there's something else it's saying, but I'm imagining that this is maybe multiple people that are involved in this buy, even though it's all labeled under control empresario. But I'm assuming that it says, I'm assuming this means additional either representatives or something like that. And that's always how it's listed for these guys. But at the same time, this Thomas O'Connor, who's some kind of vice president here, is also just selling at the same time here too, around this $50 mark. But these guys are bullish in the 40s.
Yeah. Yeah, they are. And it's 38 now.
And I mean, we're talking...
I'm just having... Yeah, and it's a lot of money in my sheet. In 12 months, it adds up to almost 54 million. I'm just thinking I'm going to wait a little bit, but PBF starts to look interesting for me for, you know, I talked about my cash position. I'm trying to point out some of the stocks that I might be interested in, and PBF is on that list right now. But I think it can drop a little bit more.
Yeah, and just to what Johnny and I have said too is like, yeah, I agree, Johnny. I think it will drop more. It's you know, it's tough. They had one barely positive day here. Maybe we found a floor down here. I don't know, but I think if you could start to see this turn around, it would be interesting to trade this one.
Yeah.
Yeah, it'll definitely be on my list of ones to watch. That's another thing too. we talked about our screening processes, and I think going forward, Johnny, one thing I wanted to do is really work on my watch list.
Yeah.
And kind of transform the watch list more into like companies like PBF, for instance, that I like the company itself, and I kind of permanently want to watch them. So anytime there's an instance I think I can trade it, I'll feel confident that it'll have enough of a bullish run to actually take advantage of it.
Yeah. Because it helps when you have followed them for a while, you know the name, you know the history a little bit, and then you saw also these heavy insider buys. Like all of these things adds to the confidence you will have going in when the chart maybe tells you to go in.
Yeah, and also too, I feel like I said, the one thing I've really been focused on is the really more important thing is knowing that when there's a catalyst that could be possibly negative, being aware of it. So if something occurs that, you know, you don't start to see something turn around in here, because I don't know, maybe like let's say on this breakout right here, you started to get interested in it because that does look bullish to me. And I don't know if this was earnings or if this was a guidance change, but you know, you get this huge pullback here. If you know those kind of things are coming up and you understand that, you know, things probably in terms of the long-term commodity cycle are starting to look like this is over, you know, priced, probably a bad time to enter. And you should be aware of that here if you're trading these kind of things. You shouldn't just be trading on only these technicals. That's why I said it's you're playing with fire if you're only looking at the charts. Like, it's a really dumb, I don't know, maybe I'm sure people do it fine, but to me, I feel like you need to know the business somewhat. You have to know something more than that.
Yeah.
And don't get me wrong, like I said, some of my positions are in biotech and stuff right now, and that's just because I'm playing around with it. But I'm telling you, from already what I'm seeing is like it's really tough to just go on the fundamental or on the technicals. Like it's really a risk.
Yeah. And that's what I like with where we are heading. Like we tie everything together, and it's all fundamentally based still, deep value based. So no, I think I start to like the entire process here.
Yeah, and I mean, this is also, I mean, you know, you can get lucky on all kinds of things. I mean, you know, share buyback news. They pay a dividend, so I mean, you can capitalize on those if you're riding them through the dividend period. You know, the debt's been getting paid down. They still have a ton of cash, so they could still do a lot. I mean, that's the other thing too, is this is why I think it's a well-run business, because even though they do have some debt on the table, they have a lot of cash. Management, I think, has been doing the right thing, and this is a cyclically strong period, and they bought back stock. They paid their debt down. So then when we go into the worst part of a cycle, for instance, they're going to cruise through that section without much worry, you know? And like I said, even if you're a long-term investor, these kind of things should make you happy, because, and granted, maybe they overpaid for this. So I don't know. Maybe you want to be critical of that. But at the same time, they're positioning themselves for bad cycles to be able to get through. And yeah, maybe the debt and stuff will go up because, I mean, look at 2020, and I know that's COVID, but you know, you get a struggling period like this, and yeah, they had to take on some debt, and then, you know, still through 2021, but then they come out the other side and they're still doing okay.
Yeah, they are.
And like I said, I mean, you look at the 5-year chart here. I mean, this is when they're struggling, right? And you know, a historically well-run company, you can get in here down at this $5 range here, and then, I mean, look at how much it appreciates in such a low amount of time. Now this is a weekly chart, but even in a weekly chart, you know, you're going from $5 to $17. If you held that for, I don't know, the year or whatever that is, not even. I mean, that's a pretty solid return, even on a longer time span.
Yeah.
And you know, if you could zoom into this, which you know, I can't do on here very well for just this time period, you could trade this during that time period too, and do what we're doing essentially now.
Yeah. Yeah, you have a lot of spikes there that where it follows the pattern that we are talking about, and then it turns and go up again.
Right. So yeah, PBF's an interesting one.
Yeah.
Did you want to do one more?
I think I could do one quick more, but then I have to go real quick after that.
Did you have one that you wanted to go over
Yeah,
specifically?
actually, I a little bit, because first time I added it to my tracker, I had all the numbers, but for some reason I have made some changes, and then it messes up the data for me in this one. But UONE, Urban One, because when I pull it now, it pulls in like a bank company, and this is a broadcaster. So I just wanted to see what your numbers were saying there, because looking at the chart on a daily move there too, it's looking very bullish right now.
I mean, yeah, it's already up a little bit much for me.
Yeah.
But with that being said, it got down to $1.70. We're around $2 now. I don't know why I'm not getting these calculations to work. Oh, I don't have an EV here, which is strange.
I get the same, so I'm not sure what's going on here. Like, there's a bunch of calculations that's not pulling in.
Well, I mean, whatever. It doesn't really matter necessarily, but just looking quick. It's probably been a while since I looked at Urban.
Yeah.
Kind of like Johnny was saying, it's a radio broadcast franchise. It's multimedia. It has a TV section as well. Cable television segment includes results of operations of TV1 and Clio TV. Operates over 72 independently formatted broadcast stations. And typically is primarily targeted to African American and urban listeners in general. Revenues have stayed steady. Margins are okay. They're going to have a negative tangible because it's radio stations and stuff like that, so it's hard to value that. But even on intangibles, even discounted, I get book value at 277.
Yeah. And it's below that right now.
Yeah, I mean, I get earnings per share at 26 cents for trailing 12 months. So even if you're doing 10 times, it still should be worth like 260. So, and that's just me saying, randomly, hold on, where you go here? There you go.
I think I added it to my tracker sheet just before it had that last drop there. So also could be already a missed opportunity on this one. And I said in my notes that I wanted it to fall below 2 at least, which it did. But then I couldn't get it to drag up my numbers correctly again. So I haven't been able to do much research on them again,
Yeah, and I mean,
I
sometimes
just saw the
too,
chart.
Maybe for the better. I mean, because overall, this is still in a pretty bad downtrend.
Yeah.
And I'd have to look more into the business. To me, in the United States, radio and TV, just traditional radio and TV, is really struggling.
Yeah.
I'm not saying there's not value there, and a lot of them keep conglomerating. What you see with a lot of these things, and it's the movie industry, it's everything, is that it keeps kind of conglomerating because there's a few really big players now who keep kind of buying up these different parts of the markets because there is value to them, but on their own they kind of struggle. It's more when you put them together with a bunch of other ones that they tend to do well. So, I mean, we'll see where this goes from here. And I'm assuming, too, that some of this bullishness is probably from advertising. I imagine, like we said, with the environment here in the States, there's going to be a lot more political advertising. This is something that, I was thinking about, is if Biden ends up stepping down, which I think there's so many Democrats now asking him to step down and someone else to take his place. If that does occur and there's a new candidate that they have to put up, whether that's Kamala or somebody else, they're probably going to have to advertise pretty heavily because it's really late in the game here to change your candidate here. It's
That's
like
a good point.
It's kind of unprecedented, you know, no pun intended.
Yeah.
So if they do put another candidate up and they want everybody to get a really good idea of what they stand for in a very short amount of time, you're gonna have to advertise the shit out of that to make sure that people get what they stand for. Now, don't get me wrong. There's so many people here are biased, and if you vote left or you vote right, like that's just how you're gonna vote either way. But there is a lot of people kind of in between that aren't just so one-sided in their mentality of how things work. And if they're trying to win those voters over, which I imagine would be huge coming up in this next election, because I feel like everyone's just kind of like, I don't like either, but I'm going to vote for my party either way, or you know, and then anybody who's independent's kind of like, God, I don't know, I don't even know if I'm going to vote or whatnot, and they're trying to get your vote. It's worth advertising to that person. So could be partly that. Could be that that because I keep seeing, I feel like with a lot of the broadcast companies is they're starting to have this bounce right now. And there's been a few companies that you and I have talked about that I feel like we played well.
Yeah. Yeah.
But
no, I just wanted to check if you
decent.
had some. Yeah.
No dividends. What is their debt? I don't know why I don't have my EV over here. They have a decent amount of cash. Debt's at 677, so I don't know when that's due, or if that could just be all leases. Now, okay, so they do have 640 in long term. All right.
Okay.
Due 2028, is that all it is senior debt here? Yeah, so I mean due in 2028, so it's not even a big deal. I mean, we have plenty of time for that. And they have an ABL facility if they want, but I mean they don't have anything even due. I mean this 650 is literally not due until 2028.
Yeah. I'm just going through my notes here on them last time I checked, and I'm saying like fundamentals looks pretty good, but they have a history of not filing when they are supposed to. Election year is a big catalyst for them this year. Have received multiple warnings from the Nasdaq, big red flag I'm writing. So maybe it's not managed too well, this company. I'm not sure, but I remember it now when I read it.
Yeah, I mean, I last time I looked at them, I only ranked them at a 2 in terms of my confidence. So there's probably some stuff that's not working great for them. But yeah, I will say it's appreciated in terms of the value for book value. Overall, they're their earnings positive. Yeah. So I mean, I've definitely looked at a lot uglier companies, and like I said, their debt, even though that debt's it's high. They're good for till 2028. I don't know what they're going to necessarily do to make up the money to pay for that by 2028. They're probably going to have to sell some stuff, or who knows.
And even if you look at this for a bit of a longer term, this would be a little bit of a play on the election, right?
I would imagine this is going to be a stronger year for them. Like I said, I just think you know the advertisement revenue that's going to come in for a lot of these companies is higher. But But yeah, same thing though. Like I said, a lot of my numbers are kind of wonky on this one, so I don't know. I don't know exactly what's going on with this one.
No, okay. And I have the same, so it's a bit weird. But maybe it's too late, anyways. Like the bounce down to what was it, 170 or 180 was where you should have gone in if you like this one.
Yeah, but at the same time too is me and you talk about one of the most basic fundamental things is the double bottom. So technical things, not
get another drop.
So I mean, who knows if this pulls back and we see it bounce off this like $1.70 again? Maybe it's worth the trade there. I would argue that it's worth $1.70 here. Yeah, I mean that's kind of my low calculation here is $1.70.
What do you think pricing about the late filings though?
That
it's
to me,
multiple
I don't
times.
love that, but at the same time too, still doing okay.
Yeah.
No one's really following him.
No, they are not. No, it's in my tracker. I'm following them.
I mean, no one even commented on the transcript, so probably worth reading this transcript through too if you're going to take positions.
Yeah.
So I mean, it's always worth it if you're going to take a position, but either way.
Yeah. Hey, Dayne, I gotta go.
Yeah, it's all good. I'm gonna pull that one down. All right, guys. Yeah, we got to do the stream a little short today just because Johnny's got to get out of here. I will be on Tuesday. I might go on a little earlier, so I'll post if I'm going to be on a little early just because it's just me here this week. So
yeah,
I'm a bachelor for a week here.
Yeah, and enjoy the time.
Yeah, I don't even know what to do. I'm like trying to think of like I haven't been able to like take advantage of having alone time. So this will be a weird week here.
Yeah, but you have your dog.
I do have my dog who's currently barking at something outside. So who knows what he's looking at out there. He's gonna keep my the alarm up in case anybody comes in my yard. So
yeah, good.
Safety first.
Safety first. It's important.
Yeah, me, the dog and the cats. That's gonna be my friends for the week. So
yeah.
But yeah, so we'll see what happens this week.
Yeah. So we will see you on Tuesday then. I'll do mine as normal on Thursday. So this will be a more like a normal week again.
Yeah, and then are you good to do the following Sunday? Because I won't be able to do it until Sunday.
Yeah, I think I will, and we will post it on X when we do the weekend one.
Sounds good.
Yeah.
All right, everybody.
Thanks for anyone watching.
Yep, thanks to anybody who tuned in. 180 subscribers. Thank you, everybody. Really hitting our milestones here.
Dayne,
that's actually
I'm
really
just
impressive.
Checking. It's 181 now.
Oh, 181. Did we get someone? Thank you. Thank you to everybody who subscribes. We appreciate it either way.
Yeah.
Anybody who takes time out of their life to shoot the shit with us, we appreciate it. We enjoy it, but I know probably most people would rather dig their ears out than listen to this. But to each their own.
And keep an eye out for the orange elephants.
Yes, always watch those for the charts. They'll appear.
Yeah.
If you go cross-eyed and stare long enough, they'll appear.
Yeah.
All right.
All right.
But I'm drinking coffee and water because it's so early here. But cheers, everybody. Hopefully it's a good week. I don't know. We had a bit of a pullback after last week, so hopefully we get a little bit of a bullish run here, and it's not all red. I mean, maybe you're short the industry and you want it all to go to shit. So maybe you're right too. Who knows?
Yeah.
But otherwise, we'll see. Hopefully some of my positions I can get turned around a little bit here and find some other ones that are interesting. And I'll let you know what ends up happening by Tuesday.
Yeah.
All right. Thanks, everybody.
Thank you.